If you've been meaning to start investing for a while now, but you haven't started, this video is specifically for you. And that's because there is a belief you might have that sounds completely responsible, but this belief actually keeps a lot of people stuck. They are stuck in analysis paralysis, never starting investing, and in turn, delaying their financial security. Today, I want to uncover what that belief is, what to do instead, and I'll show you how waiting just 1 year could cost you tens of thousands of dollars. So let's get into it. Hello and welcome back. My name is Lissa. I'm a certified financial planner, and on my channel, we talk about building wealth, building confidence with money, and building an abundance mindset. So if that's your vibe, make sure you subscribe. Let's jump right to it. Here is the belief that holds a lot of people back from investing. I need to fully understand investing before I start. That's it. And I know it can sound like the smart move, like that is what you're supposed to do. You should understand something before you put your money into it. And I'm not denying that. It's good that you know investing comes with risk. You risk losing your principal amount, the amount that you're investing with. But here's what I see actually happening when people hold on to this belief that they just need to learn more. They need to know all the ins and outs before they can start. They'll start researching, they'll watch videos, they'll read articles, follow Instagram accounts. They'll try to consume everything they can when it comes to the stock market. And don't get me wrong, researching is a good thing to do. All of this is great. It's very responsible. But what happens for some people is they just keep on researching. Months go by, sometimes years. They still haven't opened a single account. They haven't contributed to a retirement account. They still haven't taken any action to purchase assets and kick off their investment journey. If that is you, let me reiterate that this does not make you bad with money. This does not make you lazy. It does not make you less than anyone else who's already investing. After all, you probably have done some research. You've probably tried to learn about the stock market. But if you haven't started investing, it could easily mean that you're caught in a trap. So let's talk about how you can get out of this trap. Now, real quick disclaimer, I am a CFP professional. That means I'm a certified financial planner. But because this is a video and I don't know your financial situation, nothing in this video is constituted as financial advice. It is educational and informational, meaning I can't tell you what to invest in. There won't be any ticker symbols in here. But what I can speak to as a financial coach and a financial planner is there is a pattern that keeps people from starting investing in the first place. For most people, it's not actually a money problem. It is a mindset problem. This belief doesn't come from nowhere. The belief of thinking you need to know everything before you even come close to risking your money, it comes from not wanting to make a mistake. You've worked hard for your money. You don't want to lose it. You want to feel ready to invest. You want to know that you're going to be good no matter what. And I don't think that's a flaw. I do actually think that is very intentional and responsible. The thing that you got to look out for, though, in terms of waiting to feel ready and doing so much research that you never get started, is ready is a feeling. Ready is not a finish line. Your brain is wired to keep moving the finish line. You might think that if you can just understand the basics, you will be ready to invest. But then when you start learning about basics, you run into something complex and then you don't feel ready. This becomes that analysis paralysis that I alluded to earlier. The more information you take in, there's more variables you're aware of, which makes the decision a lot harder to get started, and it makes it more complex. The more you find out about different types of investments, asset classes, industries, approaches, strategies, it makes you want to research more. And again, this is a good thing to want to research, but you have to look out for, is this stopping you from starting investing, and are you losing time? Now, I know this does not apply to all of you. For some of you, it is because you're building your emergency fund and you're trying to pay off your high interest debt. So there are actual strategic reasons why you're not investing yet. I think that's smart. I wanted to make this video because I have come across so many people in my work as well as my personal life who don't invest, not because they don't have the funds or they're not financially ready to, but it's because they're waiting for a feeling of certainty that doesn't actually exist until you start doing the thing. The best way to make you feel confident about investing is to start small, and then after a year, 2 years, 3 years, and you see that it's not so scary, that is what's going to make you feel confident and more certain about your decisions. So by not starting, you prevent yourself from building that confidence by just doing. So here's a reframe that I want to give you. This is the thing that I want you to hold on to for the rest of this video and beyond. It is that you don't need to fully understand investing to start. You simply need to understand it enough and then also have enough of a foundation. And what I think is enough is a lower bar than you think. What does enough actually mean though? I want to make this a little more concrete because, of course, enough is just as vague as the word ready if we're not being careful. So here's what enough actually looks like. If you are one of the people who wants to invest, you want to build wealth, but you've been stuck and you just can't get yourself to start investing, it feels scary, you don't want to lose your money, here's what I would offer to you as what defines enough. Enough is understanding that time is a variable you can't get back. If you can understand that concept, it should motivate you to get started. You don't need to know every single investment option out there. You simply need to know that waiting has a cost. That cost compounds the longer you wait. There is something called the time value of money. It is a calculation, but if we want to think about it in conceptual terms, here's what it means. It means that money is worth more today than the same amount of money in the future, because money today has the ability, the potential to grow. So the earlier you put that money to work, the longer it has to grow and the more it can become. That's kind of why there's a big debate on whether you should take a lump sum or annuity payments if you ever won the lottery. It's a much more complicated argument between the two sides than you think. A lot of people are like, I want the money now because then I can choose what to do with it. But really, if you want to be strategic about it financially, you want the money now because of its investing potential. Because if you just get paid a small amount every year, you'll end up spending it. Maybe you invest a little bit here and there. It's going to take longer for that money to grow. If you take the big lump sum, as long as you don't blow it and spend it all, and you actually invest it and give it time to grow, that amount that you have is going to grow so much. So it's kind of crazy how we understand that example when it comes to the lottery and these big amounts that most of us probably will never win, except you. I hope you win it, and please share some with me if you do. But the point is, we have a hard time applying this to our own personal lives when the same thing applies. The longer you wait to put your money to work by investing it, the longer it's going to take to grow. If you have money in your possession now and you invest it, it has higher potential to grow. What else looks like enough? Enough is simply accepting that you do not have to figure it all out on day one. There are thousands of stocks in the US market alone, and then there are international markets. There are thousands of funds on top of that, which are baskets of stocks. You will never be able to research all of them, and quite simply, you're not supposed to. It wasn't until I went back to school to take graduate level courses in finance that I had to do calculations, to do valuations, and to figure out how much a portfolio is worth and how much it could grow. This is not something an everyday person has to learn and do. What you can, however, do for yourself is learn and understand a couple of beginner strategies that aim to take overwhelm off the table. For example, there's a strategy called dollar cost averaging. This is when you invest a fixed amount on a regular schedule, no matter what the market is doing. So if you were to invest in a broad fund that kind of covers all the biggest companies in the US, for example, If you invest $100 a month on the first of every month, that would be an example of dollar cost averaging. Sometimes you're buying that fund for an expensive amount. Sometimes you're getting a deal, but over time, it averages out. Another beginner strategy is kind of what I just alluded to, and that is diversifying through funds. For example, index funds. This means instead of buying an individual stock, picking one company that you like and buying stock in that company, you basically buy a pre-built basket of a lot of companies at once. And the art of diversification is the simple concept that we know of not putting all your eggs in one basket. So those are just some examples of beginner strategies, but more importantly, knowing basic beginner strategies like that should be enough to get started. You can continue to learn all you want as you go, but don't let trying to learn everything be a hindrance and keep you from getting started in the first place. Finally, what else is enough before you get started investing? I touched on this earlier, but I think you should have a basic financial foundation in place. Think an emergency fund so that you have a safety net, a plan to tackle debt if you have debt, and in most instances, you're going to want to be out of any high interest or consumer debt. But for a lot of people, you don't actually need to be debt-free before you get started. You simply need a good foundation that's stable enough so that investing doesn't feel like gambling. Now, here's something I want you to sit with for a minute. I want to show you with actual numbers what this looks like. And again, this is not financial advice. I'm just showing you some math with a couple of baked-in assumptions. Let's assume two people invest $200 a month. Person A starts today in 2026. Person B waits 1 year, 12 months from now in 2027, because person B thinks she needs to learn a lot more before she can get started. Same amount every month, same strategy, dollar cost averaging, and they invest in the same investment. Person A just gets started today, person B waits a year. Let's make some assumptions and look 30 years out. Assuming that both portfolios have a 7% annual return, in 30 years, person A has roughly $228,000. Person B, 30 years from now, because they didn't start until next year, after investing for 29 years, has roughly $211,000. That 1 year of I'm not ready yet didn't just cost $2,400, $200 a month for 12 months. The difference is not $2,400, it is $17,000. And that's just by delaying 1 year. The longer the wait, the bigger the gap gets, because it's not just the money you're losing. You're losing the growth on the growth. That's what compound interest does. Compound interest rewards time above everything else. It is the reason there is the time value of money. So, if you're a perfectionist like I am or like I used to be, and you feel like you're just trying to be responsible, I want you to think about it. Are you being responsible, or are you delaying for other reasons? Because it could be costing you a lot of money in the long term. I want you to feel confident as you build wealth and kick off your investing journey. You do not need to know everything. You need to know enough, and we talked a little bit about what enough might look like and feel like. But for most of you, I would argue that you're probably already there. You probably already have enough where you can start investing. If you enjoyed this video or got something out of it, don't forget to hit the like button and make sure you subscribe, because this is what we talk about here. It's not just the what of money and how to build wealth, but also the why behind we do it, the why behind what's holding us back. I want building wealth to feel good for me and for you as well. Until next time, peace out.